I must say that between the three gentlemen here, they command a firepower, equity firepower, which is doing the rough numbers, some 90 billion US dollars, 90. So that's some serious money that we're talking about. Nilesh bhai, I want to start by asking you the first question. You know, at my home, in my building, in my complex, when I go outside, and I'm assuming that we have lots of, Guju friends here. You're one. I get asked this question a lot of times. क्या लेना चाहिए? मैं आपसे पूछना चाहता हूँ क्या लेना चाहिए? And I know the answer, buy India. So that will not do.
So Prashant bhai, first let me start with a disclosure. Mutual funds are not taking any money from banks. When I receive money, it is by check. When I give money, it is by check. As per RBI's own data of financial flows of household in last 3 years, only about 1 lakh crore has come into equity. Only about 4 lakh crore has come into mutual funds, including debt mutual funds. About 9 lakh crore has gone into currency notes. Mr. Vaidyanathan, you have to fight with the currency notes. From your branches, you are disbursing 9 lakh crore worth of currency notes. This is depreciating Ashad Prashant bhai. And yet, bankers keep on giving 9 lakh crore worth of currency notes to people. They are at 31 lakh crore of retail financial household. हम लोग तो 4 लाख करोड़ है. कोई competition ही नहीं है हमारी. हम तो वो currency note वाले से लड़ रहे हैं. Hopefully this debate is settled. Thank you.
I'm sure Mr. Vaidyanathan will have a question. We'll open up the floor for that. But to that question, Nilesh bhai.
So now, yeah. Prashant bhai, we have reached a level where my cousins are telling me, Nilesh bhai, aa lai lo, kale vadhi jase. And it actually goes up. So I am at the receiving end, and I'm sure in audience everyone has made far more money than my funds have made. So I'll take their advice.
But that is a dangerous one. We often hear, right, the old story, when the panwala tells you what to buy.
So as Vaidi mentioned that SME should have lower taxes, Vaidi, you must have told this to SME exchange IPOs. They are already discounting it.
Okay, I'll come back to you, Nilesh, in just a bit. But Anish, what's just that question? I mean, what to do in the market scenario, which has done so well. The run-up has been phenomenal. We are basically making new all-time highs. The corrections and the falls which come, they're short-lived, they're sharp. Not sharp, actually, they're shallow. And very, very short-lived. 2-3 days, 2-3% of the market sort of moves back up once again. So what is the thing to do?
So the way I'd frame it is like in the markets, you get returns from two sources. Either multiple expansion, the PE multiple expands, or you get earnings growth, right? I don't think anybody would argue at this point that multiples are cheap and multiples should expand further. They might, but I wouldn't bank on that, right? So really what you have to play for is earnings growth, right? And earnings growth then depends on what happens in the economy, right? Now, I'm of the view, and I think I share that with everybody else, that the economy is likely to do well over the next 2 to 3 years. So if the economy does well over the next 2 to 3 years, the sectors that will do well, right, the increment normally comes from the cyclical sectors, right, the domestic cyclicals. So these would be things like automobiles, financial services, cement, and capital goods. I know they've done well already, but if there is likely to be a positive earnings surprise, I would still play these sectors.
Anish, I mean,
I'll make one more point.
Yes,
Between
please.
large bid and small cap, our view is that risk-return trade-off is clearly in favor of large caps at this point.
Nilesh bhai, you'll agree with that? You've been sort of advising caution for the last 2 quarters at least. We had a correction, but very short-lived one.
So we have been way early, and thereafter markets have risen a lot. But I think what is worth avoiding also is important. The low floating stock counters are today trading at crazy valuations. And it will make sense to stay away from there. It might give you short-term pain because momentum can still continue to ride. But in the long term, this will benefit you. So just stay away from low floating stock, high expensive valuation counters.
But do you agree with Anish's point, the skew has to be large caps? I mean,
Undoubtedly, yes. Right now, the risk-return trade-off is more towards large caps and larger mid-caps.
Prashant, come in there. You have a sort of global, you manage global money and Goldman Sachs. You've $8 billion of assets under management now. A lot of it is foreign money. What is the perspective? I mean, and you're getting money, you're still getting money. So where do you deploy?
So we remain fully invested at all times. Even today, cash in the portfolio might be 10, 20 basis points, not even a percentage point. Valuations, if you look at relative to India historically, we are not in the camp that they are, forget outlier, but last I saw, it is in line with the last 10-year average at the market aggregate level, at least as of month end, and I don't think March in particular, Feb, and I'm talking about, I don't think March in particular would have. And so I'll give you a precise number from what I recollect. It's at 20.7 times is the last 10-year average forward 12 months, and we are at 20.5 times. So if anything, a smidgen below. There are pockets. Now, nowadays, obviously froth is oft mentioned word. So there are pockets of froth in small caps. But at an aggregate level, neither in large, nor in mid, nor in small, we never make that call that small is better. My point usually is that it's hard enough to identify a undervalued stock. To be able to talk about in aggregate entire segment of the market being overvalued, we generally don't make those forecasts, and we remain, as always, the opportunity, stock selection opportunities are often the best in the most inefficient segments of the market. They always tend to be mid and small. So that overweight, over allocation continues to be in mid and small relative to large at this time.
So that's a bit of a slight difference, right, compared to how you are allocating money right now. I'll come to specifics and what sectors make the most sense, etc. But, we heard Manish talk about, and Ramdevji spoke about 5 trillion, 10 trillion. Is there a need to pull back a little bit? Because sometimes we are looking at, I think Manish made that point that, when you look top down, you can make a bearish case, but you then study individual businesses and you see great opportunity, right? So it's not maybe a like-to-like analogy, but is there a case to pull back a little bit? And I mean, if we're really at that moment where the decadal dividend, so as to speak, is to come our way, does it make sense to pull back and look at the bigger picture? Or will that be getting carried away? Nilesh bhai.
So let me give you answer in a philosophical way, and Anish and Prashant can give on a more financial way. Do you believe there is a God upstairs? I mean, you can see hardly anyone nodded. Now I'll prove to them God exists and he or she is an Indian. So let's look at oil prices. Israel-Hamas war, oil production cut by Saudi and Russia. Russia-Ukraine war, Red Sea disturbance. Oil should have been in triple digit. There is God which said Tathastu, it is in still double digit. US Fed 3 months ago was saying higher for longer. God said Tathastu, now Fed chairman is saying I'll start cutting rates. Karnataka election, we were worried about government. If I make a statement here, ab ki bar, people will say, bhai vote karna. 400 par. Vote on account, we were worried about it will be freebies laced election vote on account. It was the shortest speech. I normally go to CNBC Awaz every budget time. We were villa for 1 hour. You look at monsoon, last year was below average. This year God said Tathastu, it is becoming with La Nina rather than El Nino, so it should be good enough. Look at the GDP growth number. We started at 6, we are ending the year at 8. We do go wrong on such estimates, but not by 25% margin. Do you believe there is God upstairs and who is an Indian? If yes, then play like Sunil Narayan played yesterday.
But you're making my point, Nilesh bhai. So then, I mean, then what I'm saying is correct. You need to pull back a little bit and not get fixated on.
Yesterday you didn't watch Sunil Narayan betting. Uske tarah betting karo because upar wala sambal lega.
Is that in jest or is that serious?
No, I have many other points, but let them give the finer real points.
Anish, I mean, to that point, I mean, you know, you look at valuations, you look at not the near term, but the next 1 year, 2 year. That's what we do. We look at earnings forecast, maximum 2 years out. But is there any case, and can you invest that way by pulling back a little bit and sort of riding on some of these mega trends, mega themes? Valuations have always been rich, and maybe they're a little richer now. But so what, Anish?
See, I actually don't take very strong 10-year views. There's always a very wide range of outcomes possible. I believe Indian economy has great potential to do really well, but we should evaluate in 2 or 3 year periods, right? I think there will always be cycles, there will be periods of booms, and there will be slumps in those 10 years. At this point, though, over the next 2 or 3 year outlook, at least if I look at the economy, it looks very robust, right? And there are, actually, I track 4 variables in the economy. One is cement consumption, second is automobile demand, third is home sales, and fourth is power demand, right? Frankly, these are the only 4 variables in which you get hard, reliable numbers. Everything else, rural wages, etc., the numbers are, you can make what you want to make of them, right? So from a cyclical perspective, all these 4 numbers are strong, right? If I look back, you know, over last couple of decades, there have been periods where these numbers have looked strong in the past, but what went wrong, right? Home building is very, very critical. And if you see this cycle, this pickup started when real estate market unfroze and activity started picking up. If I start seeing that house prices are appreciating, but house volumes are not coming through, which is what happened in 2008, right? People were very happy that house prices were appreciating, but actually buildings were not being completed, right? Then I would get worried, right? At this point, what I'm seeing is very strong home building activity with volumes. There are price increases. I don't necessarily like that, but at least volumes are coming through. If I see, look, cement capacity utilization has reached at a peak, or if power capacity is now fully utilized, then I would say, look, the cycle has peaked. I'm not saying the long-term outlook has changed, but the cycle has peaked. So, but at this point, I don't think we're at the peak of the economic cycle.
There's a lot of new supply also coming, right? Samiran was earlier making that point.
Which is good, which is good. So that means you'll have a longer
runway.
Runway, yeah. If you don't have capacity coming on, that's when demand exceeds capacity.
Correct.
And you get the risk.
Prices go up, but volumes, units don't go up.